Good morning, everybody. It's Tuesday, December 17th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had March corn up a quarter at 445 and a quarter. March soybeans were down 5 3/4 at 980 and a quarter, and March Chicago wheat was up a penny at 551. We had a number of export sales announcements out here this morning from the USDA. 170,400 metric tons of corn to Mexico, 187,000 metric tons of soybeans to Spain. That's for 24. The corn sale is also for 24. And 132,000 metric tons of soybeans to unknown destinations, also for 24. Yesterday, we saw NOPA come out, 193.19. That was down about 3.5% from October, but still up 2.2% year over year from November. And oil stocks fell below the estimates there at 1.08 billion pounds. So, Justin, maybe a few thoughts here as we start the morning, and then we can throw it around the room.
Yeah, thanks, Dan. I don't see anything new here. I mean, we're making new lows in beans, so we're making contract lows here. So, the momentum's, beans have struggled the whole time. I think it makes sense. The South American crop's good. We need to encourage more bean acres. The arguments going through the winter is going to be, how many corn acres, how many bean acres, I think at this point. As we talked about, I think South America was kind of the key to that, depending on how their production ends up here, kind of sets the stage for how many corn and bean acres we need. Now, corn, and Dustin's talked about this a long time, corn in the world is pretty tight on a world picture. We have the supplies. So, we're doing good demand. The argument about whether we're front loaded or not is going to depend on the safrinha corn crop, in my opinion. But that being said, the world is still tight. Even with the big safrinha corn crop, I still think the world's going to be tight with corn and wheat. But right now, that's the funds have been short, or they've been short. They turned to long in corn. The farmers obviously been long, and they've been selling to the funds. So. We'll see where that goes. Beans is the one thing I think that's going to drag down these markets. If South America is going to be as good as it looks like it's going to be, there's just too many beans in the world. So that's the one thing we can afford to give up bean acres to corn. Corn's trying to buy it. I think you can see that through the ratio. We're at the lows of the move, beans divided by corn. And if you start getting close to that 2-to-1 ratio, that's where you start really getting meaningful acres. Now, usually that happens with the corn price going up. So rarely does it happen with beans going down, which has been the case in this scenario. So it's going to be interesting to see what happens. It's weird because you have, when you're below cost of production, you tend to gravitate towards bean acres because of the total cost that it takes to grow beans. So I think the ratio might have to do more work than it normally would. Usually what happens is we try to buy corn acres, and so the ratio gets really low by corn prices going up. And when you have high flat price and low ratio, you get a lot of corn acres. It'll be interesting to see. I don't know if I've seen it in a low price environment where the ratio goes low because of low bean prices. So we'll see what that means. I'm not convinced yet that we've gained a ton of corn acres just because of the economics and the cost of planting corn. In this environment, your need over $1,000 an acre, close to $1,200 an acre for a lot of I-state farmers to grow corn. And we talked about this yesterday, the farm credit letter going out, and we can debate on whose motives those are serving, but at the end of the day, it's pointing out a major problem that's coming. And at these prices and these costs, there's a lot of farmers that are underwater.
Yeah. Ben, what's on your mind this morning?
I think that the big picture stuff, Justin summed up pretty well. A little concern here if we're going to be able to get something done before December 20th with the government. We're going to get into a critical time frame here. A lot of finger pointing, and the contention is a lot of it is around agriculture. So I think that is going to be maybe pretty active here towards the end of the week. News blurbs and whatnot regarding that. So,
yeah, that's what you're referencing there is, there's a shutdown deadline on Saturday, so
yep.
it should gain speed. And there's people chattering just through social media and whatnot that there's some news guidance that is forthcoming just on, and a lot of it's posturing, right? It's back and forth, and there's GOP is looking for 12 billion in economic aid. So, and they're trying to stand firm, and I think they thought it was going to be an easier push through in a lame duck session, but it feels like everybody's digging in.
Well, and I think, in general, politicians like to draw a bunch of attention to what's going on and then look like the savior at the end of the day. So
right.
Hopefully they come up with something and don't leave people at an impasse here heading into the last 10 days of the year.
Yeah, no kidding. Well, Dustin, I was reading a story this morning. There continues to be news about the real. Fell to a record low on Monday, and I know you've referenced it a number of times, and Justin did also when he was talking about soybeans. But they're having a heck of a time over there. Big central bank, sold a $1.6 billion in the spot auction. And it was nothing they could do to firm it up. It still dropped another 1% after that.
Yeah, investors are obviously dumping real. They're unimpressed with the spending cuts that Lula presented, and we're basically looking at like Brazilian pricing, right? Because their local currency is so poor, is actually quite good in relative to the last year for corn and soybean pricing. We compete more heavily on soybeans at this time of year, going into March. So, I think that might also be part of the weight on the ratio. I think the ratio needed to go down either way, but certainly a big impact on, on that drop on beans is going to be the real. I don't really know what the final answer is. If we're looking at like another kind of just poor failed currency, that can create all sorts of problems, right? Look at Argentina. But for now, local currencies, view this as, well, export markets are going to fare out better in Brazil. They're going to continue to compete more heavily in the years to come. And the back end of the market's kind of suffered from it. Meanwhile, like Justin mentioned, U.S. has the corn right now. We're going to be the main provider of corn. That's helped spreads go inverted. The U.S. grower, though, in my opinion, still is going to need to move corn ahead of loan renewal season. And we saw this in 2 months last year. We saw it in the month of Feb and the month of August, where you had aggressive, grower selling and grower moving of corn. And those were the 2 weakest months for both price and the spreads. So you go into the new year, even though, we're obviously well off the low on corn from all these exports, all this business. I think a lot of people are going to need and want to move corn. So just kind of be wary of that. If there is a wall of corn coming, that could be one of the risks that people have for unsold corn.
Yeah, just to add to that too, I think, the best chance we had was that South America had a big weather problem. And if they're going to have a big soybean crop, the ratio is going to drive corn prices down. Like it does, unless we're going to do a lot more business, we're still going to have a 1.7, 1.8 carry out. And the rhetoric, and my fear is the rhetoric over the whole winter is going to be how many corn acres we're going to get all the way up to the March 31st report. So I think that's going to be a tough hill to climb to take prices from 450 to some higher level, the next, echelon higher. I think it's going to be really tough without maybe a safrinha crop runs into a problem, or China starts importing, or, Trump gets some big deal done, something like that, I think is going to be needed to take it from, call it 450 to $5. I think to get it to the next level higher is going to be really tough. And, you talked about the Brazilian real, but if you look at the Canadian dollar, basically any other currency is getting absolutely hammered. I think that matters too. You look at, the Russian currency, the ruble, you look at the real, the Canadian dollar, all these currencies are at, multi-decade lows. So all those are headwinds for export business too.
Yes, for sure. Yeah, the dollar is definitely a portion of this real weakness, right? It's real dollar spread. In the last year, we're down 20% in the real, which is just absolutely insane. Even for an emerging market currency. So it's the Canadian dollar, the Japanese yen, the euro. A lot of people are talking about the euro trading parity to the dollar this year. A lot of this is dollar strength, but the real in particular is singled out as one of the worst.
Mm-hmm. Oh, very good. Rylan, we got a couple minutes here. Two-sided trade in cattle and hogs yesterday. What are your thoughts this morning?
Yeah, cattle rallied early, but just kind of failed. We really haven't seen any cash trade yet. Still pretty early, and just how aggressive the Packers have been. I think everybody wants to see if that's going to translate into this week as well. Beef prices were up. They were up. Choice was up 98. Select was up 571. So we're still seeing the fundamentals hold in here. It just seems like we're seeing a little bit of a shift, maybe some caution here, ahead of the cattle on feed report on Friday, and just with some of the news that the U.S.-Mexico border, may open up after the screwworm situation in January. I think that caused just a little bit of liquidation here, but really there's virtually no change in open interest. So I don't think it really moved the needle all that much just in terms of positioning. So we'll see how it goes. But right now, I think the cash expectation this week is fairly steady. On the hog side of the market, kind of weak technical close here, back below the 50-day moving average. We are seeing some liquidation, and the managed money has been slowly kind of working out of some of their record long positions. So it just feels like we're still relatively tight right now, and carcass is still really firm. We were up 92 cents yesterday, and bellies were up 670. Ham market has been on fire, so just the demand sentiment is still really positive. It just maybe the commitment from the funds just been a little bit too much. So open interest is down about 2,400 contracts. So we are seeing some of that start to taper as we kind of work into the new year.
Very good. Appreciate the update there. Any new news will be out there with you. Real quick, appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. Doesn't cost you anything to do so. That'll keep you up to speed on everything AgYield, any special webinars that we put out, things of that nature. So again, thanks to everybody that supports the show on a daily basis. We're doing this live every day that the markets are open, 8:15 Central Time. Streaming live on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.